The British pound continues to rise since the vote earlier this week, which sort of did away with Prime Minister May's plans. Then they had the no confidence vote the next day, and things are still very much unclear as to where we're going from the UK side of the Brexit argument. But certainly one thing is for sure, and that is that the pound is appreciating here. Going back to the beginning of the year, it's seen a rapid rise with the idea that any problems that aren't going to get solved are going to get kicked down the road a ways and probably given a little more time. We look at the pound itself. We're nearing the 200-day moving average for the first time in a long time. We're trading around 130. The 200-day moving average right around 131. That we get through it, that will cause a technical squeeze higher. We aren't there yet, obviously, but we're getting there. Likewise, we've just been seeing this market with some strength behind it, with some buyers behind it. Whether it's all speculation or not, or whether there's some real technical buying behind it, is yet to be seen. But certainly, as we near that critical 200-day moving average, things could change a bit if we get north of that, but we're not quite there yet. And if we look at how the Bank of England is absorbing all of this, because certainly they're the ones that are going to be left holding the bag, financially speaking, when all this Brexit dust settles. And I think just that, I think Governor Carney is expecting to see normalization based on the fact that they're going to get more time. Now, he can't really give a color comment about what he thinks of the financials because he is the sitting governor. However, it's his belief that the markets are pricing in more time, looking for more negotiations, possibly some kind of get-together between the EU Council and the UK Prime Minister and Parliament. And I think that those are the two things that he's looking for. So you look at that March 29th deadline in the sand, it may get extended a little bit, or at least some of the negotiations may get extended beyond that, which could help with a no deal Brexit, which is right now what's being priced in. And if you look at this whole Brexit mess, you go back 2 years, this could have all been solved if you had started addressing these problems differently. A few years ago, in June of 2016, when they had the referendum, it changed everything. But literally, it's taken a long time to get any sort of substance on the table. And the UK and the EU still have some very key issues between trade, citizenship, and that border between the UK and Northern Ireland, which are still very much up in the air and will all go away if they don't get something on paper and something signed by March 29th. They'll just go to the WTO rules, and that will change a lot of things. Certainly, no one wants to see those kind of exaggerated changes, so I think that calmer heads will prevail, and that's probably one of the reasons why you're seeing the pound rally. But how much more can the pound rally if you're given the idea that things are going to maybe be off balance for a while, at least even during the negotiation stance? The pound-euro cross, which measures the two against each other, is also on its highs, so the pound really outperforming the euro while it does well with the dollar. So the pound right now seems to be the place to be, but look out, we are hitting critical resistance in the 200-day moving average. I'd like to see us pop above that before looking at any more upside levels, but for now, it seems smooth sailing as it has been since the beginning of 2019.